Good morning and welcome to a pre-market report for Monday 1st August 2022. Now before we dwell into the indexes and all that, let's look at it on the news front. Now on the news front, the first major news is that UK this week is going to be bracing itself for the highest interest rate hike it has seen in the past 27 years. So that should bring some normalcy back into the global markets and the local indexes, as we are severely overbought and adjustment cool-off needs to come as of now. Otherwise, if it does not come right now in this coming week, then when it does come, it will be so severe that it will wipe out a lot of people. So it's better to have it now than later on. Second major news is that China's factory activity has seen a surprise contraction, but that is primarily due to further COVID-19 outbreaks within the country. And then the third major news we have seen globally is that France's GDP has bounced back into the positive, which is a very positive sign for their country. Now on the local front, we basically saw the center's fiscal deficit came in at 3.52 lakh crore for April to June, which is a good thing. And then the FDI inflow has hit an all-time high of over 6 lakh crore in FY22. So that is also a positive news. The negative news there locally is basically the inflation is eating into India's basically the rural demand, which is being seen. So that is not positive. Then the other big news this weekend, which every other trader has been tweeting about, is IDFC First Bank, and due to that we look at it just now. Now when we come to the global indexes first, the global indexes, we can see the Nasdaq reached my quant resistance level, which I updated as it took nearly 1.5 months to break this one, after which I updated the next one is 13,036. We nearly reached it on Friday, and remember the futures as of now, the American futures are negative. That's why you're seeing this small black candle, and so it will be interesting to see if the Nasdaq is able to breach this and continue its upward move. I expect it to slightly breach this zone, after which it will have a pullback. Let's say with half the candle's body, it may breach this zone and may stay above it for, let's say, one trading session or half a trading session, and then head back down, because this is a very strong quant resistance level. And we can see the last one, which stopped the index for 1.5 months nearly, was not as strong as which it's currently facing. So the same can be seen as S&P 500. In fact, the S&P 500 rose on Friday and touched the quant resistance level, which I shared on basically Friday morning for us. So for them also pre-market, and it could not break through, and it basically went and stalled at 4,139. So I expect the same trend to follow in the Nasdaq, in the S&P 500 as in the Nasdaq. We may break this with a small amount of the candle body, after which we have a basically pull back to the downside. The only positive for the global indexes is that the 20-day moving average is attempting to cross above the 50-day moving average. But those who have been watching my videos for long enough know that what usually occurs when that happens. I've explained it before, so let's see how many people do remember it. Next, the Dow Jones. The Dow Jones breached my quant resistance level partially, and it has stuck half its candle body out on Friday. So now today I expect, once the American markets open, it will basically try to breach the high of Friday, after which I expect a pull back towards the my former resistance level, which will be new support for it. Now to the favorite IDFC First Bank. Now when I look at IDFC First Bank chart, I believe people are going to get trapped in the stock very nicely in the longer time frames. So the key reason I said that is, number one, okay, the results are very good, but that is going to make the stock form a strong gap up today morning and a big candle, and most people are going to go into rush to buy. So a lot of people are going to get trapped in the top half of the candle, after which it will come down. I say this as, look, on Friday it managed to breach the 37.20 candle resistance level, but now it has got a quant resistance level at 39.20 and 41.55. I expect most of the bullishness to be blown out by this 39.20 quant resistance level. However, if we're able to breach that, then 41.55 will take care of the rest. Now the reason I am saying that it's going to be a trap in the bigger picture, because let's say if it was to rise to 41.55 my quant resistance level, which if we put it, let's say, on the weekly chart also, so visibility weekly chart, we can see it's roughly near the 200-day moving average. It's a bit below the 200-day moving average on the weekly chart. 200 moving is 42. So that's going to be a strong resistance, and that is available on the weekly plus the daily chart. Also, the 50-day moving average is sloping downwards, and this gap up might cause it to have a slight uptick here, but at some point it's going to try to cross over below the 200-day moving average. And when that occurs, the guys who have bought at 8 of these quant resistance levels today in the gap up will end up getting trapped, and will have a nice decline back towards this support zone. So IDFC Bank, I wouldn't advise anyone to go long in it right now, because today is going to be the first euphoric reaction to the results. It may have today as a positive trading session. It may even have 2 to 3 positive trading sessions. However, this stock is going to trap a lot of people, as if it was rising, if it would open at this point of Friday's close, then you could consider a long, because there's a good amount of money to be made from here up to, let's say, 41.55 and 39.20. But since it will be a gap up, there's not a lot you can make until these points here. Because if it gaps up until here, let's say, and then forms a candle up till here, let's say that the whole price action has been eaten today, and you're just going to get trapped at the top. So my advice is avoid IDFC First Bank. Now when we come to our local indexes, on Friday I shared on Twitter that with a screenshot that I had told clients 7230 for Nifty and 37,800 for Banknifty were the resistance levels, and they acted perfectly. As you can see, the Nifty got stuck literally there as it tried to breach it, but it managed to just reach 17,230 and then just falter at that point, and then 37,800 also. Now right now the SGXNIFTY is indicating a small gap up, so we'll have to see how much it gaps up above this buy. I've given one quant resistance level slightly above this, but I expect at some point now profit booking to come, as indexes have had a parabolic rise. If you look on the daily chart, for example, and the long time frames, because you can see, look, one gap up, second gap up, third gap up, fourth gap up, and today with the fifth gap up, I believe that's going to be now the end of the game show, and it's going to have to come down and come back to reality, as I would like to say. So basically that is it for the pre-market video today. Thank you for watching, and do like the video and subscribe to the channel.